Joining us now are Bill Simon. He is the former CEO of Walmart's U.S. division, and Gerald Storch, the former vice chairman of Target and former CEO of Toys R Us. Good afternoon to you both. Jerry, I'll start with you. What are you watching for this week, even as we've seen some signs that consumers are still continuing to spend, but racking up credit card debt to do it?
Well, overall, the consumer is definitely still stressed. And sales for merchandise, for things, have slowed consistently since peaking last summer. So all the growth is in services, which, again, by nature of it, retailers don't, by and large, sell services. So you're not going to see it in their results. So I would expect to see a continued struggle on some of these retailers. Walmart is executing very well. I think their numbers are going to be fine. Target is still struggling. Their execution is off, and they're still trying to find their strategic footing as well. Home Depot is a star, but they're comping incredible, spectacular performance during the pandemic, and it's kind of hard to beat numbers that are that high.
Yeah. Bill, I want to get your thoughts on this, especially when I think about your former employer, Walmart, where grocery is a big part of the tickets. And we know grocery prices and food inflation have continued to tick higher and consumed more of consumers' wallets, which is part of the reason Walmart has been doing better than Target, which tends to be more discretionary.
Oh, yeah, you hit the nail on the head, and Jerry was right on. I think Walmart will end up doing well, but it's based on, their food business, which is over half of their business and still inflating at pretty substantial numbers. And that's really the difference in performance between Walmart and Target right now. I think that the broad lines, the general merchandise side of the businesses are probably operating pretty comparably. But food inflation is something I'll be looking for. It takes a little while for that to cycle through. And that should be in the forefront, something that I think we should be paying attention to.
Hey, Jerry, my two big concerns or questions is contractor project pipelines and from Home Depot tomorrow morning, are those smaller projects still good enough for a good guide and a good quarter? And is the credit-stretched consumer still treasure hunting at TJ Maxx? Or is the story going to be all groceries at Walmart? What do you think?
Look, I'm a big fan of TJ Maxx. It'd be one of my top picks. It has been for a long, long time. And why? Because they represent value. And that's where the consumer is going. That company's worth almost $90 billion. Think about it. Companies like Macy's or Nordstrom or Dillard's, the Kohl's, the department stores, they're all single-digit billions of dollar valuation. Whereas TJ Maxx is $90 billion. It's like the parasite devoured the host. This was all about how they beat department store prices. They're the whole market now when you really take a look. So they're doing fine, and this environment's built for them. Walmart's also in an environment that's built for them, as Bill mentioned. This is the time when Walmart thrives and Target doesn't do as well. As for Home Depot, it's a matter of time frame. I think they're going to struggle a little bit to show positive gains. I know, in fact, I'll bet they're going to be negative. Why? It's an open book exam. Look at retail sales last month. Their category was down by 3%. So it's obviously shrinking what they're selling right now. So there are a lot of pressure from interest rates. And again, they can't comp what they did before. So they're going to be under pressure in the short term.
Okay.
But they are an amazing operator. And they've posted numbers that have compounded this growth year after year after year. So I expect them to return to normal as we get into next year. So what happens in the short term, no one knows. But they execute brilliantly.
Bill, are we going to see pressured margins again, in part because consumers are tilting still toward essentials and groceries, which are lower margin, and maybe because of shrinkage after incidents like the one that we saw out of L.A., just hours ago?
Yeah, look, shrink has been a problem for years, and it's accelerating. I think the brazen way which people are going into stores and just clearing them out is problematic. But, I think margins will be under pressure because it's so difficult. And Jerry was talking about value. It's a value-driven consumer. And, as inflation has been pushing prices up over the last couple of years, retailers haven't been able to pass that pricing through. They're trying, but they haven't been able to do it. And so I think margins will still remain under pressure, probably into the next six months.